Good evening, everybody. I want to come in and make a quick video um, after today's FOMC decision. Yes, we got our rate cut. Are we going higher eventually? We're going higher right away? I don't know. Uh, Price is telling me something else. Um, so on the 4 hour chart, which is the one I pay attention to for all my levels, we're stuck in between a bearish and bullish fair value gap. Okay? Both of them have swing points in them. And these are the levels that I am waiting for. Until price gets to these 4 hour levels in these fair value gaps, I am not trading. So I did not trade today. Um, but what I'm looking at, which makes it kind of interesting to me, where I think, a lot of people are obviously going to think, well, we got our rate cut, we're going to go higher. We probably are, but are we going to get there? Are we going to go straight up from where we're at now? I don't know. I could be wrong here, but let's take a look. From the start of Monday, this trading week, we made a Monday high and a Monday low. And for Tuesday and Wednesday, we have been inside that range the entire time except for twice. And what were those two times? Well, they were breaks above. And if we're in consolidation in a range, even on a weekly time frame or uh, a 1 minute time frame, doesn't matter. What I see is manipulation move and then a fake out breakout, which is a sweep of that manipulation move and an immediate reversal back into range. Okay. Now on the 4 hour chart, and this is what kind of got me a little bit to thinking this way as well, is that on that rejection back into range, we closed the day below the body of every single candle made this week on the 4 hour chart. So we closed below everything. Okay. Not the wicks, just the bodies. Okay. Which makes me inclined to believe these manipulation moves to go lower. Well, this is a fair value gap right here. The reason it's not marked is because it's a two-sided fair value gap, and we have come into it now. One, two, three. That one did get there 4, 5 times. All right. So I think we've probably pretty much taken up all the orders that were in there. And if we can roll over and come back down here again, I think we're coming into this fair value gap, which is a one-sided fair value gap with one single 4 hour point in it. This is where I want to be trading. Now, conversely, um, you know, we had another range here Tuesday through Wednesday, and then we had a push down. Could be a manipulation move and a fake out breakout, and we could now just jam right up. Um, but I'm taking the longer time frame into consideration for the whole week and seeing that we've had two manipulation moves up and no manipulation move down below range. Uh, could you say this was the range? We had manipulation move, sweep, retest. Well, then what's this? Maybe more manipulation moves? I don't know. But the only two times we've gone out of range, which is usually, and I'm calling this the range, because this is the Monday low and the Monday high. I'm just including these two candles here uh, as the range. And so that's kind of what I'm seeing. Uh, we'll see what price action says. But I am not going to be trading until we get into one of these two fair value gaps and price shows me what it wants to do. Okay. Um, for those uh, that are seeing this on my charts for the first time, it is because it is the first time it's on my charts. These are time-based liquidity levels, higher time frame liquidity levels. Okay. It goes from yearly to quarterly to monthly to weekly. And then you get the Monday high, Monday low, and the midpoint for Monday. It also gives you the daily open from 6 p.m. every day. Um, the only other time-based liquidity I will be drawing in myself is the midnight open. And then on top of that, to give me the session open or session highs and lows for intraday trading. These great work great for intraday trading too, but intraday levels, highs and lows, I have put on the ICT seek and destroy indicator, but I've made some changes to it. Okay. Um, in this indicator, I have gone in and I have turned off everything. I don't want warnings. I don't want statistics tables. I don't want the labels. All I want are these boxes right here. And I've made a change to the times. I've got the Asia from 1800 to midnight, London from midnight to 6 a.m., and then New York from 6 a.m. to 1800. Okay. This is going to give me the highs and lows of each session. So I don't have to mark them in, right? Perfect. So that way, when we break a high or a low from a previous session, which is time-based liquidity, I can see how price reacts and take the appropriate trade from there. Um, I don't. Usually, you will break New York into two sessions. If for some reason I'm trading the afternoon session, I will have to mark out the AM highs and lows. Uh, but I don't want to be trading in the afternoon. I want to get my trading done through London session into the morning New York session, um, and then be done with it. Okay. But this does still give me, from tonight into tomorrow's session, gives me the New York highs and lows from yesterday. Okay. So that's the only thing I use this for. I'm not looking for seek and destroy, even though today we had it. It actually occurred. We took the highs and lows of each session along the way. Um, but I don't care about seek and destroy. I just want to see those levels without having to mark them out all the time. Right? So those two indicators do just that. With the exception of the midnight open, then I'm going to have to draw that in myself every day. Um, but those are the only two indicators that I am using for price action. The ATR is the average range of the candle size of each individual candle. I have that up because once I go onto the 1 minute chart to enter a trade, depending on how much the ATR is at that moment, I will either use one or two candles, or basically one or two times the ATR for my stop loss. I like to keep my stop losses within 20 points. Um, so if two candles is more than 20 points, I will use uh, one ATR. I keep saying candles. If two ATR is more than 20 points, I'll use one ATR for my stop. If it breaks that, stops me out, but the trade stays valid and I get a re-entry point, basically get back in where I got out from, um, then uh, I'll do that. I would rather lose one ATR than, two ATR that is more than 20 points. I'd rather lose one ATR at, 15 or 17 points than uh, losing 30 points and then having to get back in the trade again. So that's the way I look at that. That's the only reason I have this up here. I've got it squeezed down as far as I go because all I need to see is that little number on the right that says 4.63. And if I were to take a trade in Asia, my stop loss would be 9. Okay. Um, 9 points. So, uh, excuse the sniffles. I don't know what the hell's going on. But anyway, that's it. I kind of think we're headed lower before we go higher. We'll see. Uh, I could be right. I could be wrong. I don't know. It's just what I see at the moment. Uh, and I went back through today's price action, even though I didn't trade and I wasn't on the charts. And I saw some trades. Um, certainly, taking these equal highs here into the weekly open level, but not displacing through, would have been a good trade to the downside, down to the previous low. Um, that would have been good. And there were a couple others in there uh, that that you definitely could have taken uh, throughout. There was also the session trades. Certainly would have been good since it was a seek and destroy day, right? Um, from once you got into the London session, we took the Asian low. We didn't displace through, and by displacing through, I mean creating a fair value gap on the way through it. And for about an hour, it just sat there, kept pulling back up. And then on this candle, you could have entered when it engulfed the last down candle, and you could have taken that high up to Asia high um, and closed the trade there. Once we took the Asian high, did we displace through that? Did we make a fair value gap? No, we didn't. Um, and again, once you sweep liquidity, as soon as that candle that went up and swept liquidity is engulfed, you could take a short. Now, would you wait all the way down? Well, no. This is a 15-minute chart. Go to the 1 minute, you find much better entries, right? You probably would have entered somewhere up in here, and you would have been able to take this all the way back down to the previous low. Okay. Going back through the day's price action and seeing if there was a trade available and how price reacted at these time-based liquidity levels at fair value gaps is how I train my brain to see it when I'm in the live market. Okay. Because if you don't review the day's price action and see how price action reacted at certain levels, when you're in the live market, you just, it's harder to notice where these trades are and whether or not you want to take them. So always review the day's price action after the day is done with your trading style and see if there were trades that could have been taken uh, and how they might have worked out or did not work out. So that is it, folks. Oh, I don't think I mentioned it. The Spaceman BTC key level indicator by Spaceman BTC. That is what gives me my higher time frame liquidity levels. Um, it's free on TradingView, uh, and there is an extremely awesome trader that took $108,000 worth of payouts this week from FTT that uses this indicator as well because these levels are just absolutely fantastic. Okay. I recommend you putting them on your charts if you're trading ICT because time-based liquidity is the most important liquidity we can have. Host Logic even said it himself. Never really paid attention to the 4-hour swing points, which is time-based liquidity, um, until I mentioned it when we were in a study channel, and now he kind of sees what I was talking about. Um, I'm sure he'll be using them more often. So anyway, I'm out of here. The dogs need to go out, and I need to get to grab some dinner. I just want to give you guys my thoughts on the next couple of days of this week. I think we're coming down before we go up. So just let's see if that plays out. But uh, be cautious, trade your plan, stick to your risk management, and I hope everybody has a fantastic end of the week. And I will see everyone tomorrow morning for either London or New York or both. Take care, everybody.